All right. So today, what I wanted to do was basically take a look at two springs. All right. So this is just one strategy, folks. There's so many, but this is, I don't know. It's an old school strategy. All right. So the first spring be right here. What you see is no, fuck, that shit is all the way back there. Nah, I'm not gonna do that. I'll just do two springs. The first one is probably right here. Second one is right here. So this one is on, I can't find the damn day. All right, January 7th. And the next one is January 28th. All right. So, um, th these are, that's the daily chart. All right. So daily chart, daily springs with 15 minute. So daily with a 15 minute. All right. If you go under 15 minute, you can, but it's just, to me, it doesn't make sense. Um, I mean, you could do 5 minute, but I mean, how much risk? I don't know. It's too low if you go below 15 minute, in my opinion. Although you might have some visibility into certain things, I think it's good enough. All right. So daily and 15 minute. All right. So this is the daily on the left hand side. In the middle, the bar chart in the middle is an hourly because I want to split the daily to kind of see, just have a little bit more understanding. And on the right hand side is a 15 minute. The 15 minute is for entry. The daily obviously is for the setup, right? So what do you need here? Let me write this down. In any strategy, you need the setup. Then what do you need? Then you need the signal, whatever signal it is, confirmations, whatever. And this should all be in the trading plan, by the way. If it's not in the trading plan, you don't know what you're doing. All right. Unless it was in the trading plan and you did it so many times that it becomes second nature. That's a different story. But there's setup on the higher time frame, signal on the lower time frame. There's something other. Okay, so you definitely need the entry protocol, right? How do you enter? Then you need the setup, signal, and the signal includes confirmation. So don't think it, you know, what was that? Hold on, I'm trying to think. Setup, signal, entry, the entry order, then it gets filled. Once it gets filled, you need the stop management, how you move stops. These four are pretty basic. Now you can add to this as well, like you can have level and all of that, but that would be already be part of the approach. So setup, and this is on the higher time frame. Signal is on the lower time frame. Signal includes everything, including confirmation and all that. Then you need the entry protocol on how it is that you enter. Then you need the stop management. Oh shit, I forgot all the time. Before the entry, when you get the signal, you need to be able to do the, not the exit, yeah, but it's the profit potential. All right. So because any investment, you always look at how much money you can make, and then it's a good investment or not, and then how much you would need to risk and all of that. So all right. So it's setup, signal, profit potential, entry protocol, stop management, which is the initial stop and how you're going to move the stop. It's very important, folks, because this basically, these are the should be 1, 2, 3, 4, 5 should be in your trading plan, right? This is all execution. This is trading. This right here is trading. All right, identifying an edge, how to enter, how to take profit, how to exit. 1, 2, 3, 4, 5. These are this is the execution part of your trading plan. these 5 pieces. You must have these 5 pieces. All right. Now, some people will use for what they do is they use POIs or whatever it's called, level, right? So they might have something like I don't know what the hell it's called. Yeah. All right. So there might be something like level, right? Here and then setup. So it would be level on the higher time frame or POI, and then the exact what they want happen at that level. Then they'll go to lower time frame signal. So I'm gonna write this down. You could have this high time frame level, and then higher time frame setup. What basically what is happening at that level, right? So this is high time frame level. God, it's like this stupid language POI, whatever the fuck that means. Point of interest, right? So higher time frame level, but some folks call it a different name. Then the setup, then the lower time frame signal, then the profit potential. Now here's the thing with profit potential. Typically it's a higher time frame profit, like whatever, if you're using the higher high or higher time frame support and resistance. But the calculation, right? The calculation is always done on a lower time frame. So the lower time frame calculation, that has to be done on a lower time frame. It's a higher time frame profit potential, typically using a higher high or the prior high or the resistance or support. And that's what most people do. But the calculation cannot be done on the higher time frame. It's the if you're doing the point and figure calculation, it has to be done on a whatever the lower time frame is. And the entry protocol, right? And then finally, the stop management, which includes 2 things: initial stop and how you move your stop. Initial stop and how you move your stop. So if you have a 2 lot, or whatever, however many lot you have, right? How are you going to move the stops? If you have 1 lot, if you have 10 lot, if you have 50 lot, who knows? But this is 1, 2, 3, 4, 5, 6. These are the 6 pieces that should be in the trading plan that are directly related to trading, meaning execution. The other parts of the trading plan, like how do you back test, when do you back test, or when do you take stats or stuff like that. Like, okay, what book do you read routinely to refresh what you know? Is it whatever, and things like that. How do you keep your emotions in check, or if you have a psychological part of the trading plan. And that's really important, by the way, because usually when people make money, they can't hold on to it. I don't know why, but it's all psychological. When they make money and they lose it, typically that's psychological, because if you take a look at the when they made money, they hit a point where for some reason they increased the size a lot. And when that critical error is made, when the size of the position is so big that one loss hurts so much, that's typically the turning point, and the profit curve goes from an uptrend to a downtrend. So anyway, so these 1, 2, 3, 4, 5, 6. These are 6 pieces. All right. Now I just had to mention that because these are 6 critical pieces. Once you have these 6 pieces identified, you know what to do and what to do next. I'm going to repeat that. You know what to do and what to do next. When you know what to do and what to do next, that's a major milestone. Right. Anyway, so let's get out of this shit. Delete all drawing. We're gonna take a look at two springs. Here and here. And this is spring strategy, but again, break and retest is a very common strategy, and it works. All right, that's all I gotta say. But what makes it work is if when the breakout on the break is coming from contraction, that's when it works. All right, it shouldn't be high up. It should the breakout should be coming from a contraction area, and then it tests, and it should have follow through. Like it needs to be a rally coming from contraction, all right, and then it pull back and test. Then it works. So that's the second one. The third strategy is a breakout strategy, but instead of buying the breakout high, remember you always have smaller breakouts before you have the major breakout. So because when the market is pulling back, it creates ranges. So there's always a smaller breakout before the higher high breakout. So the breakout strategy that I like is the smaller breakout, which happens when the market rallies, pull back, that starts consolidating, and you have overlapping bars. Once you have overlapping bars on a pullback, it's actually creating a base because of those overlapping bars on the pullback, and then you have a thrust. So that's the breakout that is the first minor breakout from the pullback, and I think that that's a very good way of trading. So that's four strategies. Now, obviously, springs are up thrust, but also retests of the high and low bar, which are usually what you call this order block, right? The order block is the high bar, the low bar, the red bar before all the green bars, or the green bar before all the red bars. It's just the origin. That's all it is. So anyway, so there's numerous strategies. There should be some logic behind them. All right, I keep getting deviated. Let's just take a look at how this happened. All right, we're gonna take a look at first January 7th. This is January 7th. Okay, so I'm going to explain something here, and I'll tell you this is completely from Wyckoff. None of this is mine. All right, it's directly from Wyckoff, and and it's the real Wyckoff, not the bullshit that you see online, which they don't know. Basically going to a one diagram schematic on stockcharts.com and thinking that that's Wyckoff. That's bullshit. That's what that is. All right. So let me explain what it is. All right. So now you have a spring on gold. This is the daily chart. Right? Yeah, daily chart, and you did a spring. So when it hit a spring, you're gonna notice that on the daily that there's not a lot of penetration below, right? It doesn't have follow through. Instead, it totally reverses. Obviously, you're going to notice some high volume signatures here. Don't let the red bar scare you. The red bar, the majority of it is above the prior low. So don't let it scare you. All right? Even if it's a big red bar, the majority of it is above the prior low. And after that, you have high volume again, and it's a reversal, which tells you that the red bar before it is really a minor climax for two reasons. One, it doesn't have a lot of follow through, so it's ending the move because it doesn't have follow through, which is confirmed by the green bar after it. All right? So it's more about a climactic, minor climax that penetrated the prior low, confirmed by the green bar right after it. Now, going to the hourly chart, you see, bang, 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 right here, right, right here. Oh shit, it's the wrong one. 1 second. Yeah, okay. Well, you see here, yeah, you see here, it starts going sideways, and what you're gonna notice, volume increases on the up wave. Not only does volume increase on the up wave with a 50, but this 50 is bigger than the last 14 up waves. So can you explain to me how on a break of a low you have the biggest volume in 14 waves on an up wave? What's going on? Why? What's going on is they're buying. All right. After that, you finally have your higher high up here. All right. Now I can't catch everything. All right. So over here, it does hit an up thrust position, and that's why there's some selling into a spring position with both sides of the range. So the key thing to recall here is on the hourly chart, you have all this buying pressure, that is unveiled. All right. So all this buying pressure came from the spring position, and it made a higher high. Yes, it was an up thrust position. It didn't have follow through, but it made a higher high. Right. Now we're gonna look at the 15-minute, and now I'm gonna start using like the Wyckoff, what he was trying to get across. So pay attention. When it does this climax here, which is biggest volume 32 wave down, and you see the big green right here and all that, right? So this big volume here. This is then uh, then followed by big volume up, big volume down, big volume up, big price action up, big wave, big volume. So when you have that down up action or the up down action where you have big volume, big move up and down, that means that the climax is passed and the trend is tentatively up. Again, let me say that the climax has passed because this is your climax, and it has passed because of the buying that resulted after the climax. Again, you have a climax, and then you have the big uh, uh, rally with volume, and in this case, it's very obvious because it took out the high. So, what does that mean? The climax has ended, and the trend is tentatively up. Does not the key word being trend is tentatively. That's the key word, tentative. If if this is short covering, what should happen now is the selling should come in and break. If this move up is short covering, this buying wave short covering, this should break. It should be sold, and it should break. So option one, it's short covering from heavy selling, short covering after it. And let's confirm the confirmation would become in the form of renewed selling, which then breaks the low. Option two, this is buying for a move higher, meaning a trend. If that's the case, it should build support and volume or liquidation should decrease. Again, if this is for the purpose of an uptrend for higher prices, then it should do two things: build support, and liquidation should dry up, or what it calls volume should dry up. We see support being built in 1, 2, 3, about 3 or 4 waves. So it fits the criteria of 3 or 4 waves with multiple attempts to go down that don't go down. So it built support in this box. And it did volume dry up. Now here is 267. Here is 7, 8, 10, 7. Again, comparing the climax low to these attempts to go down, the ratio is 267 to 7 or 8 or 10 or 7. What's that mean? It means liquidation was completed on the move down. The move down is 267. The liquidation was completed. And the second criteria, the third criteria here, which is low volume or liquidation, it means liquidation is completed. 267 versus 8 or 10 or 7. How did it go from 267 to only 7? Because there's nothing left to sell. So no liquidity, no liquidation, whatever, liquidation is completed. Okay, and you have a base. Fourth criteria takes out the high. At that point, you don't have a tentative trend, you have a confirmed trend. At this point, when it makes the higher high, the trend is not tentative anymore. It is confirmed. So confirmed. So here I'm going to label. Here you have climax being passed and the trend is tentative. All right. Here you have the liquidation is completed and the building of support, basically a base. Liquidation is completed because of low volume. Base, you see multiple attempts to go down, up, down, up, down, up, down. They build a base. And then finally, the trend confirmation, no longer tentative, is right here. At that point, the market has turned from a downtrend to an uptrend confirmed. All right, now, so this all this came from a spring. Now, same thing we're going to look at on 128. All right. So market is going down, 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 down. Here, what do you have? 263 and then demand after. And I've explained when you go volume down, volume up like that, what does that mean? The trend, the climax is passed. That's what it means. The climax is passed. So if it's passed, that means the trend is tentatively up, which means if it is short covering, they will sell and they will break the low. Because if it's short covering, then once the short covering is done, which is going to be on the pullback up here, you want to see selling to break the low and renew the downtrend. If it is for a move higher, the liquidation should dry up, like totally dry up. So we're going to see. Step 1, climax is passed and the trend is tentatively up because demand came in right after climax. Second, The liquidation is complete. How do I know? This is 263. 62 still selling pressure. 118 definitely still selling pressure. But when it goes to 56 and 12 on these attempts, there's no liquidation. The liquidation dried up on these secondary, tertiary tests. It dried up. It went from 263 all the way down to 56 and 12. 12 is dried up. All right, liquidation dried up. There is so no supply. All right, 263, and in the base that is being formed, only 12. Liquidation has gone from 263 to 12. It's dried up. So liquidation is completed, and you have the base. What is the base? It is support. You need the establishment of the base, because you know your markets have to have a cause. All that means is you created a base. What is a base here? It can be two things. One is repeated attempts to go down and having no volume, meaning there's no selling. It could also be interpreted as accumulation, and the low volume could be the end of accumulation, which means what? Markup will ensue. I don't want to get into all that. All I'm trying to point out is liquidation is completed because you went from 263 all the way down to 12. And the base is being built, as you can see, up, down, up, down, up, down. One attempt, two attempt, three attempt, four. And how much volume came out as the attempts were going down? Only 12. And then it went up. So the second criteria of liquidation being completed with the support being established is done. The third is the trend confirmation. Now that doesn't really come, I mean, you could say it came here, right? But I want to see it after the base, and that's right here. Trend confirmation. Right now, technically it came right here. Well, I understand that, but if we're taking it from perspective of base first, then confirmation, then that would be over here. So all of this happens, which means what? You have the uptrend, right? And eventually it cracks. I haven't analyzed this, but you could do it in the same fashion. Unfortunately, the market's not trading now, so you have the selling, the base, the buying drying up. Now you have a lower low, and it can create the downtrend. Anyway, so you see these three things. Now, I just want to make it clear, this is not me like making shit up. This is what Wyckoff explained. And if you want to know where, it's in the first study in, what is it, the 7M New York Times. If you take a look at it, when he explains the liquidation being completed and the springboard and all that. So where here is the springboard, right? The springboard is when your liquidation is completed, which is right there, right there. That's your springboard. That's your springboard. The climax, and then the demand, and then liquidation completed. Again, climax, demand, liquidation completed. It's ready to go right there. That's the springboard. All right, let's go back here. Where's the springboard? Climax, demand, liquidation completed. It's one of these. It's either this 7, 8, or that 7. I don't know which one, but right here, you're on the springboard. Right there, you are on. Right there, you are on the springboard and ready to go. So this is it. Now, I don't understand the you know, the diagram that every schematic or whatever. It says something about climax, secondary test, and all that. The problem is that that's a model. It cannot be applied as a pattern. So, which is how it's taught, or at least how people are applying it. Climax, automatic rally, secondary test, some phase A, B, C, D, then possible spring there, then important sign of strength, followed by LPS, followed by more important sign of strength. Like what? I don't know. That is not. I'm not even sure what to say about that. Um, Other than it doesn't even have. At least it doesn't call out the springboard. What Wyckoff said was to trade springboards. That is out of the signals that he mentioned, or the buying opportunities. He said trade markets when they're on the springboard. And the model doesn't have a springboard. The model doesn't even have a breakout. So I'm not really sure where phase A, B, C, D came from, but the idea is good to have a schematic. It's just maybe it's the application is totally incorrect, meaning to use it as a pattern and then force fitting it onto stock charts and saying this chart, oh, this is climax, this secondary test, and this. That is an error. That's a major error. All right, so I wanted to draw that distinction of what Wyckoff is and what it isn't. And this right here, what I'm showing you, is the proper reading. And you can confirm this for yourself by going to section 7M of the Wyckoff course, and you will see where he clearly mentions climax has passed and the trend is tentatively up, then mentions liquidation is completed, and instead of saying SNR base, he says something like widening base or something like that, widening base or base of support or something. And then he talks about the trend confirmation. So all this is a more accurate representation. And this is also what you see, as I've showed to you right now on gold. But let's take another market as well. I wanted to show it on copper. Yeah, where did I find this? Okay, we're going to take a look at the spring on copper. So there's a spring right there, right? Again, don't be scared by the big red bar. It's a climactic bar. How do you know the little green bar right after it? And just by looking at looking at what's happening here. So again, the same thinking. You see, the market goes down. It has what, 43 down and 67 up. 43 down, 67 up. This is very clear demand coming in based off of volume. So you say climax is passed, the trend is tentatively up. Now second, liquidation is complete. Where? Here. Why? 67 up. How much down? 4. 4. 67 up. How much down? 4. 4. Is that's not clear? I don't know what to say. That is very clear. Now, do you have the base of support or what you call widening support or whatever? It's just the base. You have the support forming. Yes. Why? Because you have one attempt, two attempt, three attempt. Again, one pullback, two pullback, three pullback. That creates your base. And then finally, you have trend confirmation. I don't know, is it this one or that one? Probably that one. Yeah, I would get in before. Now I ask again, in this, where is your springboard, not the spring. That's a different concept. The springboard. The springboard is the point where accumulation is ending and markup is going to begin. The launching pad for markup. And that's right here. And possibly this too, because this right here is very, very low volume. Very low volume. I mean, imagine 67, then goes down to 4, and then finally only 2. And lo and behold, what happens? Markup. Why? Coming from the low volume, the lack of liquidity, the lack of volume, the lack of selling pressure. What is that called? The springboard. And from there, you, you fly. All right, that's all, folks. Hope you learned something, and do yourself a favor and go read the Section 7M. You can get the course from SMI online. You can also, if you want to just see it, I'm sure it's on the internet. You can go see it on the internet. SMI has an online version of it that's really, really cool. All right, take care. Bye.